Hey guys, welcome to this week's episode of the Swyftx Squawk with me, Pav, lead market analyst here at Swyftx, and we're going to talk a lot about what's been happening across the world at the moment. The markets obviously have been quite soft. We haven't seen great conviction, and things are getting quite boring. In fact, back to historically boring levels, which I'll touch on very shortly. But first, I just wanted to touch on the idea that while we have seen the conflicts really start to boil over in the Middle East, I thought what would be quite interesting is to look into, if we look at it objectively through some data, what can we learn about what's happening now in the current news cycle versus, let's say, the tariff outrage that we saw earlier this year. And what we have here, using Google Trends, we can have a look at what normalized data looks like when we compare these events. So this is looking at search terms of Israel, Iran, tariffs, and China. And what the data shows us is that over the last 90 days, the collective interest in terms of news searches has been far greater for this current conflict that we're seeing boil over for good reason than what we did see with the tariff issues earlier this year. Now, this tells us two things, right? The fact that if we do want the market to be confident and investing, it usually happens at periods historically where there has been obviously less trepidation around global stability. And that's a big thing right now. We can obviously see that the search terms have blown out of proportion at the start of June. And if we're expecting that the market is pricing in a lot of the news that we're seeing right now, really what we're looking to understand right now as investors is potentially how bad is the news? Is it potentially we've seen the worst of it? Or has the market not priced in what's yet still to come? So what we can see in the short term is that we are starting to see the intensity of these search terms starting to peter off a little bit, at least since the start of the year. But obviously the big thing that we're all left in the lurch on is what are the global leaders getting to do in the coming days, in the coming weeks to try and calm a lot of this uncertainty. So I think that's key in understanding how the market is more emotionally charged. And when we turn to some option market data, which generally tends to be some of the more sophisticated money, just simply because it is a more sophisticated instrument, the data, while it can be a little bit noisy, it's very telling. So what we have here is the delta skew of 25 delta. So that's basically looking at when we have calls and puts. So calls being basically market participants expecting higher prices and puts being people expecting lower prices. When we peg these two together, measuring from a 25 delta, which is basically a market pricing a 25% chance move for higher or lower, we can understand, is there more of a consensus that, look, if we're going to see a low probability move, like 25%, like we're saying, is it going to be to the upside or downside? Very simply put. And we can see that the 0% being the baseline here. When we do move into more positive territory, there's more of a onus that there's asymmetry to the upside, or that the market is happy to spend more of a premium to potentially get exposure to what it's perceiving is a move to the upside. And we've seen that in the past when we look at the April-May period there as well, the market pricing in a pretty similar call skew. But right now, what's important is that all term structures, so we're looking at options that expire on a monthly, 3-monthly, 6-monthly basis, they've all been trending to the upside. Now, that's quite telling in the sense that a portion of the market, at least, is happy to be segmented and thinking that maybe a lot of this tension that we're seeing across conflict is more of a short-term issue rather than long-term. Reality is we won't know this, obviously, until global leaders come out and provide some sort of consensus on what direction things are going over there. But then when we marry this up against volatility in the market, basically going to the downside for many weeks now. So when we're layering up these ideas of our crypto markets, or Bitcoin specifically here, at 18-month lows, back to where we did see that initial breakout on Bitcoin back in October 2023, we're also seeing escalation of geopolitical events. Is this potentially some sort of climax that we're coming up to? Could we start to see the market maybe over-indexing for more downside when there may not be the news that is to take us there, especially since we are seeing tariffs be less of an impact now than what they were in the past as well. So I think when we're thinking this holistically, while we don't know short-term what could be happening, we can start to get at least a broader understanding of how the market is thinking right now. All in all, I think the next few months and weeks obviously will be quite key, which is quite obvious to say. But right now, it seems like the market hasn't really started pricing in any surprises. And 2025 has really been a year where we have seen obviously quite a lot of negatives, even though there's been plenty to celebrate with the Genius Act in the US this week, going through the Senate, setting the stage for stablecoins to be legislated. So that's all from me this week. I hope that's been insightful, and we'll be back again next week. Thank you.